Now about that unconditional takeover offer for ECM Libra by its MD Lim Kian On, independent advisor BDO Capital Consultants is advising shareholders to accept the offer of 37 cents per share, saying it's not fair but it is reasonable. BDO Capital says this offer is 11 cents lower than its estimated fair value per share of 48 cents. That's a discount of about 23%. Having said that, the firm noted that for the most part, ECM Libra shares have not been traded above 37 cents for the past 5 years, up to date of the announcement of the takeover offer. The offer price also represents a premium of 2 cents or 5.7% up to the last trading day, which is May 19th of 35 cents. It also noted that ECM Libra shares were relatively liquid. Plus, non-interested directors have not received any competing takeover offer, nor any other offer to acquire the group's assets and liabilities. So BDO Capital believes the offer is an opportunity for shareholders to realize their investment in the company. Berjaya Sports Toto's fourth quarter earnings is up 35% thanks to lower price payout at Sports Toto Malaysia and better performance from Philippine Gaming Management Corp. Net profit rose to 77.5 million ringgit, while revenue inched up 1.4% to 1.5 billion ringgit. Top line had improved thanks to higher revenue contribution from London-listed luxury car dealer HR Owen, but that was partially offset by Sports Toto Malaysia's lower revenue, which shrank because of the GST. It declared a fourth interim dividend of 5 cents a share. For the full year, net profit was down 15.3% to 306 million ringgit. This was partly because of a 18 million ringgit stamp duty refund following the aborted listing exercise of Sports Toto Malaysia Trust in the previous corresponding quarter. Revenue grew 5% to 5.6 billion ringgit. The number forecast operator is expecting a challenging year ahead, but it's confident of maintaining its market share in this business. Following the proposed disposal of its Tuckahoe business, MAA wants to use the 290.45 million ringgit raise to acquire businesses in the manufacturing and education services sector. Group CEO Muhammad Umar admits that both the sectors are already crowded and not something MAA has done before. He said the group has the financial capability and a bit of management capability, but it is not an industry expert in either sectors. Hence, it is actively valuing a few opportunities. MAA Group, which owns a 75% stake in MAA Tuckahoe, can raise gross sale proceeds of almost 394 million ringgit after selling it to Zurich Insurance. The group has declared a special dividend of 35 cents per share, and shareholders will vote on the proposed disposal next Tuesday. The PN17 company is exiting the insurance sector after selling its core business, Malaysian Assurance Alliance Berhad, in 2011. It intends to lift itself from that status in 12 to 18 months from June 30th, when the group submits its regularization plan to Bursa. Binapuri scored a 73 million ringgit contract from Petronas's Rapid project in Pangeran, Johor. The contract involves package 22 of the project with pipe sleeper and underground works. In a Bursa filing, Binapuri noted that the works shall be completed within 18 months. And with this latest award, the group's unbilled order book stands at 1.62 billion ringgit. The project is expected to contribute positively to its net assets and earnings for FY16 from the contract income in respect of progress payment received. Complaints against ride-sharing company Uber and GrabCar aren't subsiding just yet. Travel Agents Association MATTA has called on the authorities to regulate them for operating outside the licensing rules. MATTA Inbound VP Tan Kok Liang says such unregulated operators are no longer tenable as legitimate cabbies incurred extra costs by complying with licensing requirements. He said the industry is ready for fair competition, but what irritates MATTA is the unfair advantage gained by doing business the illegal way. He added that it is also adding salt to injury when licensed operators are more likely to be targeted by enforcement agencies like the police and SPAD. Tan said Uber and GrabCar vehicles should be stamped or patterned with their company logos to eliminate part-timers and opportunists. Not only that, for the app to weed out bad drivers after a complaint is simply too late after a victim has fallen prey.